The major index is rising roughly 1% Thursday as investors look to corporate earnings and focus on progress on the fiscal stimulus package. Let's get inside the markets. We're joined by Victoria Fernandez. She's Chief Market Strategist at Crossmark Global Investments in Houston. Good afternoon, Victoria.
Hello, Fred. How are you?
Doing fine, thank you. Well, Victoria, a lot of strategists nowadays are saying, hey, look for the rotation from growth to value stocks, and so shift your portfolio that way. I remember you always talk about the barbell approach of having growth and value, but I understand now you're emphasizing growth stocks or overweighting them. Why so?
Yeah, so Fred, we did have that rotation probably over the last quarter, right? And people were really anticipating the reopening trade, and so they really wanted to get in on some of those more cyclical stocks and some value-oriented stocks in there. And they were afraid that the big run-up we had seen in a lot of the tech names and a lot of the growthier names was going to come back. But we've seen that hasn't actually been the case. Those names have continued to do well. Look at some of these larger names that have already reported earnings, right? When you look at Microsoft or Apple, Amazon, these names have just done tremendously well. Their earnings were really strong. And for us, we're always looking at an area that has that longer term growth trend. And we think these names are still the ones that are going to do that. So even though we have some value names, some cyclical names in there, and we do think you need it because the reopening trade is a true and thing that is really happening that we're going to see. It's that growth component that we think is going to give you the biggest upside over the next couple quarters.
So how much more would you overweight the growth part as opposed to the value part on that barbell?
Well, the scale is tipped a little bit. I wouldn't say it's completely one-sided because, again, we do like a barbell strategy of having both. And I think you just have to look at kind of individual names to make that decision. So, we have a name like McCormick that people would not consider a growth name. But if you think about it, McCormick actually raises their prices like 2 to 3% every year because none of us really know what we pay for a container of cinnamon, right? And so we don't know if our price has gone up from last year. So there's that consistent growth, but it's not necessarily a growth stock. So you can have that growth story on the cyclical or value side, but we've had such strong reports and strong guidance on some of these techier growth names. We think you need to add a little more there right now.
And Victoria, we got a weekly jobless claims, which fell more than expected last week. Yesterday, we had private payrolls for January. They expanded by 3 times more than what economists had expected. So is this all pointing to a bullish sign for the jobs report that comes out tomorrow?
The interesting thing here is I'm not sure the number matters that much. And Fred, look at last month. We had a horrible number, right? We had a negative number, and the market did not really respond that much to it. Maybe you had a little bit of a knee-jerk reaction, but the market is really looking further out. We know that the vaccine rollout is doing really well right now. I want to say the last numbers are like around 1.3 million per day, 1.4 million per day that are getting the vaccine. So people are looking forward, and we know the payroll number is a look back. So I'm not sure that it moves the market tomorrow, but you always want to see the trend do better. We want to see the labor market come back from this horrible incident that it's had during the pandemic. So we'll be looking at those trends to make sure we continue to see good trends. Continuing claims was trending down again. We got those numbers, like you said, today. So those are all positive. And even the employment component, like in the ISM numbers, were really strong. So we think we're going to get a decent number tomorrow. But again, I'm not sure the market reacts to it.
Even if I know the consensus is calling for around roughly 50,000, could it possibly be a good news is bad news scenario if we get a very strong number in that everyone's concerned about the size of that fiscal stimulus package of 1.9 trillion when some Senate Republicans are saying shrink it?
You're absolutely right, because a lot of what we're hearing is that the credit card spending that picked up in January, some of the consumption numbers that we're seeing in those high frequency numbers, right? Like the open table numbers, the miles people are driving, all those are improving. And a lot of analysts are saying this is because we're just now seeing the benefits from the stimulus package that passed in December. So if we're starting to see things do better and people are happier with these numbers we're seeing now. You're right. Do we need as large of a stimulus package? There was probably a lot of push to get it done quicker, so that the larger size made more sense. Now I think, yeah, you're going to have a little bit more debate going on than maybe people anticipated if we get a stronger than expected number tomorrow.
Okay, we'll be watching. Thanks a lot, Victoria.
My pleasure.
Our thanks to Victoria Fernandez of Crossmark Global Investments. I'm Fred Katayama in New York. This is Reuters.